Hi, this is Mani from bse2nse.com. So in this video we'll talk about price action trading strategies, and before I move on with this topic, you can read my book now free of cost in PDF format at bse2nse.com. You can also join us at Zerodha and get a free training material on futures and options trading. So let's move on to the price action trading strategies. Here basically let me just give you an input. Most people, when they start off trading, they trade based on the news, or trading based on news that they get that a company has backed some orders, that the company is going to grow so much, on stories like that. So the problem with the news is that we will try to judge based on the news, and we look to pick a direction, and wherein we do not follow any technical analysis or fundamental analysis, and we go wrong there. So the price action trading strategy will avoid trading based on news or thinking about anything else. We will look to trade based on the price movement, meaning if a new high is getting created, it means that buyers are in control, and it's you're more likely to succeed if you go long rather than going short at that time. So you most likely look to compare the prices, or if a new high was created, it could be an intraday high, it could be a monthly high, it could be a weekly high, it could be a yearly high, or it's an all-time high. So it can be used on all time frames. So the examples I've just mentioned here, for an intraday trader, you can just look to go long when a new intraday high is made. The only suggestions that I make is avoid first 30 minutes of a day, first 30-minute trade in a day, because the morning 9:15 to 9:45 is more like a panic trade or a freak trade. So just avoid trading in the first 30 minutes of the day, because it's going to digest whatever has happened overnight, and you normally do not get any kind of trend, meaning you may create a new high and then it may just fall rapidly from there. So avoid the first 30 minutes to first 1 hour of trade, and apart from that, anytime else a new intraday high is getting created, you can just look to go long, and make sure that the intraday high that is getting created is closing, the 5-minute close is above the intraday high. And similarly, you can go short when a new intraday low is created. So every time the market, the 5-minute closing is below the intraday low, then you can go short. And apart from this, once you've made the entry, you can look at some of the candlestick analysis to exit. Meaning once you've made a long entry, if you see bearish engulfing candle or an inverted hammer, you can use that as an exit point once you're in profits. So I'll show you a chart, an example of today's Bank Nifty intraday chart, and based on that I'll show you how to use this, so that will give you more idea. So this is today's intraday Bank Nifty chart, and you can see here, let me try and draw a few lines here. So this is until 10 a.m. here. You can see here this is 10 a.m., this is 12 p.m., this is 2 p.m., and this is 3:30 p.m. and the markets have closed. And the entire day, the day low is at around 15,030, and the day high is 15,300. And avoid, like I said earlier in the video, avoid the first 30 minutes or until 10 a.m. or first 1 hour of trade. You just avoid. And I'm gonna just draw like two lines here. One is the intraday line, intraday short line, which is I want to use a slightly thinner line here. So the intraday low is 15,030 here that you see. I've drawn a straight red line so that you can kind of see that. And I'm going to draw, okay, I'm sorry. Yeah. The first 1 hour high that was created was close to 15,200. So I'm going to draw that line here. Okay, and you can see that I'm going to make circles going forward. Okay, after the first 1 hour until 12 p.m. or until 1 p.m. it's not actually going anywhere, and it's facing resistance here. You can see that it has tried to clear the upper side once, and then one more time here, and then one more time here, right? And it has tried to clear the new high here. This entire zone until 12 p.m. It's just market just range bound, meaning neither the buyers are taking control or the sellers are taking control in the day. And you should look to avoid the first 1 hour of trade. I'll just mark it here as a box. Because in the first 1 hour, like I said, you most likely expect a freak trade to happen, and you should not look to trade in the first 1 hour if you want to be successful. So after the first 1 hour, you want to look for new highs getting created, meaning the 5-minute closing should close above the day's high, the intraday high. So here it fails to close above the intraday high. In all these cases, it's just touching it max. But here is a case at around 1 p.m. or before 1 p.m. that possibly after the European markets have opened here at around it's closing above it's closing above the intraday high, meaning it's created a fresh high, and as a sensible trader you can look to go long here, and around 15,210 or 15,220 you can look to go long as soon as it closes above the intraday high. And then you can see that for the next 15 minutes the markets continues to rise in that pattern, and buyers are in control here, correct? And it does go about like 60 to 70 points higher, so you could have booked profits of close to 40 points at least. You need not catch the entire 60-point range. And then, like I said, you have a bearish engulfing pattern here, wherein this negative candle it entirely takes out the previous candle almost on the upside also. So this you can use as the entry point because it's creating a new high. And here you can see the first candle, which is the negative candle. After that, until then the buyers are still in control, and finally here the profit booking kicks in, so you can also book profits here, correct? And then again market slowly trips down. As you can see here, you could have made like 20-30 points, and as it tricks down, it doesn't close below the day high. It just touches there, and then it bounces back, and then again it consolidates, and you have a decent buying coming back here. So of course the first high that is getting made is the opportunity. After that, the next opportunity you can decide to take, or you can choose to opt out. So here again from the support line, it again goes up. Buyers are coming up here, and again you see a bearish engulfing here, wherein the negative candle totally is shadowing the positive candle. So in case you entered here, you can again book profits here, and again you can see that markets are finally closing at the support line, which is the first 1 hour high period. So basically this is just an example, and this is at an intraday level, and you can get this charts in my website bse2nse.com. I can just show it. You can just go here, bse2nse.com. I think it's not opening up. So you can just get this chart at bse2nse.com, the intraday chart, the 3-month chart, and like I said, you can apply this on all time frames. It can be on the intraday level at the 5-minute chart, or you can try and do it in a 3-month chart, or you can do it on a 1-year chart. So you can look to trade based on it. Of course, if you're going to trade intraday, you should look to square off pretty soon. And if you're trading based on the monthly chart, you would look to hold it for 2 to 3 days. And if you're trading based on the yearly chart, you may look to hold it a little bit longer, maybe a month. And always make sure that once you are in the profit zone, use the stop loss and push it up, and make sure you end your trade in profits. So it can be little amount of profits, but it's always okay to use the stop loss and make sure that you end the trade in profits. And as usual, feel free to post a comment in this video and I'll get back to you. And subscribe to our YouTube channel and stay in touch. And do join us in Zerodha. You will save a lot in brokerage as well. Thank you. That's it for now. Bye bye.